Hello, and welcome back to Explain the Charts. Today is April 30th, 2025, and we're diving into a comprehensive analysis of AUDUSD, examining both the recent news and the chart data to make sense of what's happening and where it may go from here. Recent news suggests a complex interplay of factors influencing the Aussie, including US-China trade tensions, RBA rate cut expectations, and US economic data. We'll see how these events are reflected in the charts. Let's begin with the daily chart. Here, we can see a broad overview of AUDUSD's price action over the past several months. Notice the recent volatility, particularly around early April 2025, which coincides with news of potential US-China trade wars and dovish bets on the RBA cutting rates, according to news sources. We can clearly see the sharp drop at this time. Now price has come back up, but it's approaching previous resistance levels, and it has a ways to go to return to where it was before this drop. Now, let's zoom in on the last few weeks to get a clearer picture of the more recent price action. We'll filter the chart to only show candles from the start of April 2025 until today. Looking at this range, we can see AUDUSD attempted to recover, but it hit resistance around 0.66, and it has since pulled back. The recent candle shows downward momentum. Now let's go to the 1-hour chart to examine it in more detail. We can observe that the recent price action has been choppy, which means sideways movement, indicating indecision in the market. There's a bit of a channel that has formed where the price has been ranging. We can also see it bounced off a support around the 0.638 level, which could be an important point to watch. If it falls below the support, it could continue the downtrend further than expected. To look even closer, we can narrow the view and switch to the 15-minute chart. Here we can get even more detail on the price action, and it confirms that the price has been ranging sideways recently. It's also respecting support and resistance levels. We should look out for those levels if we're considering trading. So, what are the key levels to watch? A break above 0.642 and sustaining above that level is a buy signal. A break of support at 0.638 would confirm a bearish outlook. The likelihood of the price reaching 0.66 again in the short term appears unlikely, considering the current downward momentum. We should monitor how the FOMC meeting goes on May 6 to 7th. Until then, trade within the range.